So is a wave of Wall Street deal making on the horizon? Let's bring in Sunaina Sinha Haldea. She is the global head of private capital advisory at Raymond James, joins us on set. Sunaina, it's always great to have you here, so welcome. I want to start right there because Leslie just used the term private markets. We've seen this explosion in demand and appetite for it. The fact that you're seeing BlackRock now jump in a much more significant fashion, what does it tell us about private markets versus public markets and investor appetite?
I think you're seeing a result of great inflows into private markets over the last decade that's culminating in interest from the majors like the BlackRocks, who need to diversify out of public markets only plays and take advantage of the growth in private markets. Why do investors like private markets? Because there's relative value arbitrage there of buying low and selling high, buying at sensible valuations, adding value in the case of buyouts, in the case of credit, lending smartly to sponsored deals. And all of that has caught the attention of the institutional investor that has a sizable allocation into private markets, as do private wealth investors now. So the combination of the asset and AUM growth is what's attracting the BlackRocks. Remember, it's not just HPS this year. BlackRock's done GIP, an infrastructure fund, is done Preqin, a data gatherer in the private equity space. So they've made a very big move into private markets in 2024.
It's a good point, and they've done it very quickly in just the last couple of months, essentially, with those three names you listed off. So how does this position us for 2025? There is a sense that the animal spirits have been unleashed. M&A is going to come back into the forefront. IPO pipeline is going to open up in a much bigger, more significant way. When you think about deal making, when you think about offerings to market, 2025, do we finally see all this pent-up demand, the dam burst, essentially?
I think you continue to see steady evolutionary growth upwards. There were a lot of companies and a lot of founders who wanted to sell their businesses, or private equity investors who wanted to sell businesses from their prior holdings that were waiting for the outcome of the election. And now that the election is behind us, a number of those transactions will come to market in January 2025, and we'll see the results of those processes come to the forefront sometime in Q2. So we're expecting a big tick up in volumes Q2 onwards in the M&A world. But is it going to be a V-shaped recovery like we saw in 2021 post-COVID? No, but it's going to, quarter on quarter, it's getting better. Volumes are getting better. Liquidity in the markets opening up. And I think it's a matter of when, not if, when we see the IPO window open.
Well, when there's this much happening on the road in the markets and the economy, you got to watch your blind spots. So how could this go wrong? Starting with private credit. What's the danger here for, maybe first-time investors or first-time in a long-time investors who are rushing into this market?
Well, I think the big danger is what is your entry valuation and where can the accidents happen? The biggest risk in the markets right now is actually something that's happening live today. It's the geopolitical macro risk, the exogenous shock to the system from outside. On its own, the U.S. economy looks very strong, a very healthy labor market, as we saw from the jobs number today, a soft landing or no landing scenario unfolding around us. I think that the U.S. market compared to U.K. and Europe looks incredibly strong and robust for deal making. What could spoil the party? I think it is what happens outside in the rest of the world, what happens in Ukraine, Russia, what happens in South Korea, what happens in elections in Europe, and so forth. I think that's the big question mark, because that's what we saw in 22. We had a really robust market, and when the Ukraine war started, everything started to turn south again. And that question mark, investors need to be able to price in whenever they enter any asset class. But I think on a relative value basis, private credit and private equity are better entry points today than many public markets.
All right.